Hello, members. This is Tom Morrison right here from the home office of the Metal Treating Institute in Nashville, Tennessee. We're so excited you're here to be with us today to talk about the PPP loan forgiveness and all the things that are changing about that as people are trying to look at their loans and if they should give their money back or not. So before we get into that today with today's guest, I want to remind you that to the right, I'm going to hit send over here. There's a place where you can hit on the bottom right over here where you can post questions for me and Daniel. If you have any, you can see I just posted up there. It says you can type questions or comments here. It's down on the bottom right. If you don't see a chat line, you can then look and hover down below the screen there and you'll see chat. Click that and the chat box will pop up on the right. We're very interested in your questions. Want to make this very informative and answer all your detailed questions. So a couple of big happenings this week for MTI. So MTI is really increasing the effort in three things through this COVID crisis. We're seeing the difference between members that are really doing well and those that are struggling through it are the difference of three things. One is knowing for certainty as close as we can about the future, knowing where you stand against the competition, and really having good trained people. So there's three things that if you're not in them, you really need to try and get into all three. One is our monthly sales reporting program. It gives you a 14-page report that shows you lots of different graphs and shows where you are. You can see those graphs there. It shows your trends versus your local district as well as the national. It even gives you a ranking. It doesn't tell you the companies. It only tells you how you rank amongst the companies in your reporting area as well as around the country. What that does, that gives you a way to get to your sales and production class or your sales and production staff and get them tuned in to, we're number 18 out of 20 in our district. Let's work hard to get to 15. So there's lots of good data in there, but really for you as an owner or someone that runs a company, it allows you great information looking in the historical effort to look at how can you make decisions in the future. So great information there. And where that leads to is another part of the program is our forecasting. Our forecasting company, ITR Economics, is phenomenal. In this 8-page report you get every quarter that comes from the data we submit, they will get the forecast for the next 3 years. And I know many people saying, well, forecast, how good could they be? Well, if you look out in 2017, they were predicting that our 2019 year-end sales were going to be down 1.9%. And guess what those sales turned out to be? Down 1.85% 3 years later. These guys are really good. They're actually predicting the end of this year to be down 18.5% just because of the COVID and all the kind of things that are going on impacting us. So if you're not in our sales program, you're going to want to do that. You just simply go out to heattreat.net and look at the benefits tab at the top and click down, and you can just click on monthly sales program. And there's a place there where you can submit to us that you want to set up an account. We've got over 135 of our heat treat plants involved in that program. It's really good data, and they really make big decisions based upon it. So the other thing you want to do is the ops cost survey. This is another report. You simply will, you can see it provides graphs and data in there. It tells you how you rank against people your size. In COVID-19, the key to winning business and the key to managing your company out of success is knowing where your costs are and where they need improvements, but how do you compare to the competition? This is another way where you can enter in. It's going to be 10 different metrics as a percent of sales: cost of labor, cost of energy, cost of work comp, cost of G&A, sales expense, key cost areas that drive your company. It's very easy. It takes just a few minutes once you get the data to plug in those numbers. And then at the end of and June 30th is the end of our next reporting period. So you want to get signed in by June 30th. And from July 1st to July 31st, you're going to have an opportunity to put in your last 2 6-month set of reporting numbers. And on August 15th, you're going to get the download and see how you compare and how your numbers are through this COVID crisis. And the great thing about the report is the first 3 months were not really significantly hit. The last 3 months, most heat treat shops are really seeing some influence. So knowing where your costs lie is going to be so significant for you. So you need to get into that, into the ops cost program. Same thing with the sales. Go out to heattreat.net, click on the benefits tab at the top and hit the ops cost link. And then in there is all the details and a link for you to get yourself signed up for the program. The third thing you're going to want to do is our NT Online Academy. I mean, it has got great heat treat technical sessions. It's got safety certificates as well as management courses. If you got somebody managing 2 or more people, it's imperative that you get them into our online management courses. They are phenomenal by Dr. Rick Marks. He teaches our YES program. And more people are now, COVID obviously drove a lot of people out, but before COVID, more people were leaving their companies than their boss. So it's imperative that you put somebody in charge of people that have the right skill sets to be able to do that. So go out to mtiacademy.com and check out our training online. It's the most convenient way to train your people to be the best for you in the future and today. So that enough said, sales get in it, ops costs get in it, training get in it, and be the best when we come out of COVID-19. Here's one little reason why. The people that are going to be successful is you look at a relay race. Relay races, they grab a baton between 4 people. The people that wait for the baton to get in their hands before they start running to the future are going to be the ones that take the longest time to recover from COVID. If you start running right now, getting these programs and start running, when you get the baton in your hand, you're going to be fully prepared to get the growth that is going to come back to our industry and our marketplace. So get going today. So today we have Daniel Mayo from Withum Advisors. They've done our taxes for about 12 years now. Love their partnership. And when COVID-19 took off, unfortunately, they jumped in and started passing out great resources to members out there to really help us move through and to their client base around the country. And we invited him in today to kind of talk about, because there's some significant changes coming down the PPP, the Payroll Protection Act, about how you report and all those kind of things. So we invited him to come on today. So Daniel, say hello to everybody out there.
Hello, everybody out there.
So I want to, Daniel, give us a little bit of background, 45 to 60 seconds. How'd you come to Withum and what's your background?
Sure. So I joined Withum about a year ago, and I'm a lawyer by training, but I spent the 7-8 years prior at KPMG. And prior to that, I was working at law firms, both large law firms in Manhattan. And also I worked with my father at a small firm in New Jersey many years ago. So I started out my career. So I sort of ran the gamut between big firms, small firms, worked in accounting firms, law firms, also worked in-house at Citigroup and Lehman Brothers. So I'm a tax guy by background, but I spend a lot of time now on the PPP and accounting issues and tax return issues for the middle market.
I got to ask you, CPA and an attorney, I mean, have you found that to be highly beneficial for your clients because they don't have to really jump out for that little bit of legal advice, because CPA accounting work all turns into that in a lot of occasions. You found that to be a benefit?
Yeah, it's very helpful, and especially when interpreting things and clients want that extra guidance. And I think it's very useful. And I see that as particularly here at KPMG, they had probably 3,000 lawyers in the firm.
Wow.
But with them, we have about 1,400 people around the country, and lots of smaller percentage of lawyers. So I noticed a difference a lot more here in this setting than I did there, but that makes a big difference.
So with the PPP, take us back a little bit and kind of talk about in small terms, what was the general purpose of the Payroll Protection Program?
Yeah, so Congress, the president signed it in March 27th. And the purpose of this thing was to provide compensation to employees and to keep them on the employer's payroll. And so what they wanted to avoid was a situation where the unemployment rolls swelled by tens of millions of people. And it did anyway,
right.
But it would have been tens of millions worse. And so there's part of this is an effort to assist people to get compensation to their employees. Part of it was political in that they wanted to keep people employed, and part of it was just it made sense to keep people working for their employers, hoping to sort of kickstart the economy and to help it pick up when things are ready to pick up. Everyone would have been in place so they could kickstart the growth.
So how is the PPP in the general sense structured to benefit that?
So the PPP provides a forgivable loan to businesses. And so companies, the term now is a 5-year loan starting June 5th. It used to be a 2-year loan period. And what it does is it provides a loan that can be used for payroll, certain overhead items, and that's it. It's not intended for office furniture, office supplies, that kind of thing. It's meant very limited purpose loans to borrowers to use for payroll mostly. And the way it works is they provide compensation to the employer. So the employer is acting as a conduit between the government pays the employer pays the worker. And so what this does is they say to the employer, if you participate in this program, we will let you include in your forgiveness amount when we forgive this loan up to, it was 25%. 2 weeks ago, they changed it to 40%. So up to 40% of your forgiveness amount can relate to your overhead costs, which includes your rent, utilities, and interest on mortgages, covered mortgages.
Now, let me ask you something. I've read some stuff where rent is not just rent, it's lease payments, the capital leases on like copiers, machinery. I mean, can you how does that play out? Is that true? Is that the case?
Well, they haven't said too much about the rent and what it means. And so there is a train of thought that it only relates to the real property, and that it only relates to your building. We think they're going to publish additional guidance on that, because that is something you're raising, that it makes sense to include other items like copier,
Right.
automobiles. There's a lot of other items, personal property, where it can have much broader applicability. But so what we're telling clients now is keep track of these items. If you're bumping up against, if you need them to get your loan forgiveness amount to 100%, include them. And also keep track of that. It used to be 25% limitation. Now it's a 40% limitation. So up to
Right.
40% can be that overhead. So keep track of it. We'll see what the guidance is when the forms and the applications are ready to be submitted to your lender.
So what are some of the big questions you're hearing out there from, I know a lot of our members probably have those questions, but what are some of the bigger ones that you're hearing out there amongst the clients out there?
Yeah, I'd say the number one question we get these days is, should I use an 8-week covered period or a 24-week covered period? And so on June, I think it was June 5th, they signed the PPP Flexibility Act of 2020. And what this did, it defaults everyone to a 24-week covered period. And you have the option to use an 8-week covered period. So what they did is they allow you, you can triple the time period in which your spending is included in this forgiveness amount, knowing that you're subject to a maximum forgiveness of the loan amount. But you now can triple the spending, so you have greater opportunity to achieve that 100% forgiveness.
Right.
But along with that, you have to now keep track of your full-time equivalent employee count and your wages. So if you reduce wages over that 24-week period, or you cut employees over that 24-week period, it's going to reduce the forgiveness amount. But in general, for most people, it allows you to triple your expenses. So from 8 weeks to 24 weeks, right, multiple of 3. You can multiply by 3 your payroll, your overhead items, and as long as any headcount reduction is less than the increase, it's a net positive. So for the vast majority of businesses, we're seeing that they're going to achieve 100% loan forgiveness as a result of
So
these changes.
right. So, and I understand that if you got a lot of our members have less than $2 million alone, and a number have over 2 million. So could you explain the cutoff of the 2 million? I know there was a rule, I guess, that said that and if you had a loan under $2 million, that they were going to assume that the need was there.
Right, and this goes to FAQ 31, one of the SBA's frequently asked questions. And 31 gets to that representation on the loan application that said, the current economic conditions make the loan necessary to support the ongoing operations of the borrower. And so the big question was, what does that mean? And does it mean that you have to be down to your last dollar? Does it mean that you could still have a successful business, but the loan is helpful? And so there was a lot of ambiguity about that. The frequently asked question that came out was in response to press reports that companies like Shake Shack and AutoNation were obtaining these loans. And they
Right.
didn't want the large public companies to be obtaining the loans on the PPP program, because at the time it was a limited funding program. It turns out they're now overfunded, and there's no limits anymore. But back then there were, and so they wanted to limit the number of people that were borrowing. So they said, we're going to really put pressure on people and examine and review the loans to make sure that that representation you made was accurate. And then they came out after some couple other rules that they've ended up by saying, if your loan is under 2 million, that they're going to assume you met that representation. They're not going to audit you on that. They'll assume you meet it, so you're off the hook. You really don't need to worry about that. If you're 2 million or over 2 million, taking into account affiliate loans, then they're going to audit you and make sure that your state of mind and your sort of good faith at the time you made your loan application, that's when you would assign that representation, that at that moment in time, you had enough uncertainty about your business that it was reasonable to make that representation. Now, it doesn't mean that your business had to go to hell in a handbasket after that date.
Right.
It just means that as of that date, that moment in time, you had a good faith belief that there was economic uncertainty that was going to cause disruption to your business.
I would like to see the survey that said, how many of you on March 1st did not have an unreasonable fear for the future? Because I think everybody did it around March 1st. You know, it's kind of crazy.
Well, what we're seeing now is, so a lot of companies who are over 2 million, and we have a lot of clients in that category, are documenting the need. And they're going, what we tell them is, go back to your records and your files, go back to the time you signed your loan application, and think back to what the economy was like, because it was a lot scarier time then than it is now.
Right.
And 2-3 years from now, when you're audited, or maybe 1 year if you're over 2 million, it's going to be further removed from that date and that uncertainty.
Right.
So we're telling people, document it now, write a memo, and look at your board resolutions at the time, document the uncertainty and your state of mind on the day you filled out your loan application, because you're not going to remember those details a year from now.
Well,
So that's going to be important.
It's funny how you talk about uncertainty, because I can remember our board of directors, there's 19 people, our board of trustees. We left our winter board meeting in South Florida on January 20th. Absolute certainty, record economy. Everybody can't find people. I mean, the amount of enthusiasm that came out of that board meeting was off the charts. And then January 22nd, I think it was, the first COVID case was diagnosed, and everything just ran downhill from there. And it's amazing where it seems like the last 4 months, 5 months have been like 4 or 5 years.
Right, exactly. And also, don't forget the stock market dropped 30% in mid-March.
Right.
And so a lot of people were filling out these the loan application process started April 3rd. And so people were fresh off their assets dropped significantly, the retirement accounts. If the company had an investment account, that dropped significantly. And things were looking pretty bleak at that time. So it's important to document that if your loan is over 2 million, so you can adequately defend the review that's going to be coming from the SBA
right.
at this point.
So one of our members has asked a good question about reduction of wages. So he says, when you talk about reducing wages, are you talking about wage rates or weekly earning reductions, such as due to reduced hours?
So they're not talking about hours. They're talking about the wage, either the hourly wage or the annual wage. And so you compare the base wage without bonuses in the first quarter of 2020. That's your reference period. And you compare that to your wage rate in the covered period. So if the employee made $10 an hour in the reference period and they made $10 an hour in the covered period, there's no reduction. So it's not based on hours. If there is a reduction that causes a reduction in forgiveness, then it's based on, there's an hours component to that calculation. But determining if there's a drop is just hourly or looking at the annual wage.
Right. So salaried management, you'd be looking at like the monthly the monthly salary, total salary, and then hourly people, you'd be working as compared first and second quarter, the hourly rates.
Right, hourly rates or annual wage. Yeah.
Gotcha.
So if someone made 50,000, you want to see if they cut it to 25% off that $50,000 wage.
Very awesome. Well, Ben Rasher, appreciate that question. I hope that got you an answer there. Ask for clarification if it did not. So going back to, so let's talk about what about documentation for all this stuff? I mean, you had to potentially be audited. You have to get through the loan forgiveness. So what should business owners be thinking through with their accounting departments of what to document, how to document it, and how long?
Yeah, and when to document. So let's just talk briefly about the timing. So let's say you got your loan May 1st, and you're looking at a 24-week covered period, 6 months. So your covered period is going to end at the end of November. We think you have up to 10 months to fill out your loan forgiveness application. Your lender will have whenever you do fill that out, say you fill it out in January, your lender has 60 days to make a decision and report that decision to the SBA, not to you. The SBA then has 90 days to render a decision back to the lender. And then the lender tells you what the decision is. So it'll be a while before you get an answer on your forgiveness calculation. But so now your question about documentation, what do you have to provide? They're going to want to document each aspect of the forgiveness calculation. So they're going to want to see the payroll amounts, what you're spending on payroll, what you're spending on rent, utilities, and interest on mortgages. They're going to want to see that the utilities existed on February 2020 because they had to exist. They had to predate February 15th, 2020. They're going to want to see your 941s, your federal 941 employment tax returns, your state tax returns, your employment tax returns, because those are an element of payroll costs. And so they're going to want to document all of these things in the application process. And that's what the banks are going to do. When the banks look at it, it's essentially going to be a perfunctory review by the banks. They're not looking for fraud. They're not looking for improper expenses. They're looking to make sure that the numbers you put on the application match the documents that you submitted. The SBA may do a more detailed review depending on manpower.
Gotcha. So one of our members made a good point that when you're doing your wages, you only count up to 100,000 for your top people, correct?
Yes. So I think what they're getting at is the rule says if someone is making more than $100,000, you can exclude them from the wage reduction calculation. So what that means is if you had an employee making 150,000 and you cut them in half to 75,000, that will not count as a wage reduction for purposes of this rule. So you will not suffer a reduction in forgiveness. You can ignore that person. But if you cut someone from 100,000 or say 90 to 60,000, right? They have a 2/3 reduction.
Right.
That will count because they're making under 100,000.
Right.
There's another quirk to this rule, which is very strange. And the way they count that over 100,000, they say that, and it's favorable for borrowers because the more people you exclude, the less likely you are to have a wage reduction, right?
Right.
So you want to kick a lot of people out of this calculation. And the way they worded it, it says, if any employee made more than $100,000 on an annualized basis during any single pay period in 2019, then you can exclude them from the calculation. So if you paid someone weekly, that's $1,923. That would be their weekly pay.
Uh-huh.
But what if you gave a bonus in 2019 and your bonus was $2,000? Well, someone making $50,000 a year would have about $1,000 a week. Plus that bonus is $3,000 a week. They're now excluded from the calculation because they made over $100,000 on an annualized basis in one pay period. Strange result, right? And so most people who are getting bonuses are probably going to be kicked out of the wage reduction calculation, which is helpful to borrowers.
I would have liked to have been in the room when they were talking about how to calculate that.
Right.
So,
by the way, you know who that helps? That helps the companies paying people a lot of money.
Absolutely, absolutely. Yeah. So let's talk about. So, is there anything else people should be aware of in terms of documentation, things they need to keep? And
yeah, I would say that there's a 6-year hold period. So the SBA is saying they want you to hold these documents for 6 years from the later of when you get your loan forgiveness from the bank or you repay your loan. So there's a long tail to this, and the SBA may come calling for a long period of time to audit you, and to audit two things. One is your eligibility for the loan, and two is your loan forgiveness calculation. So both are subject to review at any time.
So another member asked a great question on wages. So if you were running significant overtime, oh, bless you.
Excuse me, thank you.
So if you're running, and we may have just answered this in another way, but if you're running significant overtime in the past year, base period, and now there's no overtime in this, and that is a reduction in wages, I mean, is that hurt in any way, or are they going to look at the base wage no matter what you do?
Yeah, so they're looking at the base wage, the hourly rate for employees, or the annual wage exclusive of overtime.
Gotcha.
And so that's a key point they put in the application. It was very subtle change, but they said your base wage. So you're not looking at overtime to determine in that reference period.
So now let's talk about, I mean, where do you feel like there are areas for members to, I mean, because, you know, a lot of these people are keeping all kinds of documentation. This is the first time I ever have to keep it in this way. Where are some key areas where they could get tripped up and not have the right thing that they need?
I think the biggest thing people need to focus on is planning. And I think they need to ensure that to think through their expenses, their payments, their full-time equivalency calculation, to think it through and plan it out. Because if you spend, 1 to 3 hours planning it out, you'll guarantee you get full forgiveness. You can fix any problems early enough in the process to ensure you get that 100% full forgiveness. Because the last thing you want to have happen is you spend your full loan, say you receive a $100,000 loan. You spend the full loan amount and find out you're only going to be forgiven $60,000.
Right.
And you have a repayment obligation of $40,000 at that point.
Now so talk about what are the terms on that repayment? And like 1%.
Yeah, it's a 1% loan, but the Flexibility Act dramatically expanded it by extending the deferment period. So no payments are due until the lender essentially gives you a forgiveness decision. It was 6 months, you had to start paying. Now it's when the lender gives you a decision on the loan.
Right. So, I mean, for me, I know I've been asking some friends, how are they doing this? And I know one of my friends has a spreadsheet, and he just built a spreadsheet based upon the application that he got from his bank on the SBA as the draft. And he just started plugging in the numbers. And then, when he took money from, and I think, you tell me if I'm wrong on this, but I've heard some best practices are when you get your loan, you actually, best thing is to put it in an account all by itself. And when you expend expenses that you're going to reimburse with it or pay for it with it, that's when you move the money over, and then you keep that tracked in an Excel spreadsheet or some documentation that has the proper receipts and stuff. So you can easily have one place where you've got all that documentation.
Yeah, that's a good point. So it's not required. We recommend that as a best practice, that companies keep the loan segregated and can prove where the money was spent and easier to show it. Um, the way to think about it, I would say to many businesses, I would first think conceptually about it and say, do I have reductions in headcount? And if you don't have material reductions in headcount, you don't have material wage reductions, you're likely with a 24-week covered period to get full forgiveness.
Right.
There's a lot of calculators online. I know the AICPA has one. That's the American Institute of CPAs. They have a calculator, and we built our own calculator, which we're not posting online, and we're not even providing it to clients. We're using it and providing the output, but we're changing it so frequently as guidance comes out that we don't want old versions out there. In the process of building ours, I probably reviewed about 7 different calculators we found on the web. And so what we did was we have a group a core group of SBA people. And so we would get on the phone for 2 or 3 hours and try and beat up these calculators and test them with different scenarios to see how they work. And that process was invaluable to help us develop our own, but it really causes me to alert a lot of people that beware of what you get online.
Right.
Not all of them are accurate. Use a trusted source, like AICPA is a pretty trusted source. I haven't beat up that one, tested it, but I'm sure if they produce it, it's probably a quality.
I would say they are the National Association of all CPAs.
Right. One would think.
They got it right.
Well, on the other hand, though, we looked at, I won't say which one, we looked at a major payroll company, one of the larger payroll companies in the country, and their initial calculator was wrong in many respects. They were wrong on some of the interpretations on how to calculate the loan amount. So the size alone is not an indicator of quality, but it usually is. And we were just surprised to see that this one company was been consistently making mistakes in their advice to clients.
So one of our great members out in the Midwest, Stacy, has asked, there's as you talked about, there's so much misinformation out there. Is there, and I know this is probably a place where you're going to say, well, just go to withum.com. What she's asking, is there a common place where people can go to get the right information?
Well, the SBA has a website where they list all of the information. So that's a great source of the guidance that's out there. As to the, what information on the web, you really need to be careful because this stuff's just changing rapidly. And anything you read, you really need to look at the date is as important as the content of the material.
Right.
Because so with them, we're in a unique situation because we're big enough to see the larger end of the spectrum, but we're not too big that our clients are phased out of this, right? If you have more than 500 employees, you're out of the PPP altogether. So like a big 4 accounting firm is not seeing a tremendous amount of loan activity because their clients are too big.
Right.
And so we're in the sort of the zone of where our clients, we're seeing we're in the middle market, we're seeing the full spectrum of $20,000 loans to $10 million loans. And that's in our sweet spot. So we have a large group dedicated to this. We meet 5 days a week, every morning from 8:30 to 9. We have a call. We discuss the latest guidance. We discuss the issues we encountered the previous day. And so not as a sales pitch for our firm. I'm sure other firms are doing this, but we're not seeing other firms committing the level of resources we have. And it just means they're committing them elsewhere.
Right.
But that's why we're able to provide the level of content we have. But again, I stress the date is as important as the content itself.
Right. Well, I will say this to Stacey and anybody else out there. So obviously SBA is a great place to go, and some people want to understand an interpretation of the SBA. So I would just make a plug for Withum. I mean, ever since this thing started, you can go to their website at withum.com and click on coronavirus, and there's just mounds of great webcasts and good information out there that help you at every level along the way. But also there's an attorney firm called Venable LLC. They specialize and are connected to national nonprofits all around the country and helping their employers navigate this. I get resources from both Withum and Venable on a daily basis, if not weekly basis, if not daily, on this stuff. So both of those are great resources for you to reach out and get that kind of information that are out there. So are there any big areas? I mean, I know we've talked around a lot of it. So the big areas of the Payroll Protection Program to pay attention to, I would assume, would be timelines, documentation, and just make sure that you're on board with everything. Anything else that you think people should be aware of?
Yeah, so the couple things, the guidance is changing rapidly, as I mentioned. So I can't stress enough, even when you're reading articles on our website, check the dates, subscribe to the link, put your email down so when the articles come out, you'll get the latest guidance. And we expect a tremendous amount of guidance to come out in the next 2 to 3 weeks. We know that the SBA had 30, they have about 46 frequently asked questions they've published so far. They're all on the SBA website. And they keep a running list of these questions. You can find them there. They have about 30 of them on hold, and they were going to issue them right before the PPP Flexibility Act was passed. So they're going to be issuing those in the near future. I think they just wanted to harmonize them to the new statute. And they're also going to issue a new loan application to account for the new 24-week period and to fix some probably errors they find along the way. So more guidance is coming from the SBA. Stay tuned for that. And keep current and keep planning, because make sure you've done your calculations, run it by your accountant, or if you don't have one, engage someone who's knowledgeable about the PPP, who can help you plan and make sure you're getting the right amount of forgiveness. And so it makes sense also to work with an advisor early on, because unless you're going to do it yourself, you're likely going to engage someone to help you with the application, the calculations to submit along with your application. So you might as well get some planning along the way and speed that up.
Right. Well, and I would encourage people also to really pay attention to the interpretations and rules on the rent part, because like I say, I've read some things that says they're going to really clarify and allow you to use capital leases on copiers and those kind of things as well. So we talked about the big elements. So one of our members just submitted, Jim from Cincinnati just submitted, so any details on how full-time employee calculations work with summer help, interns and other high school part-time labor? I mean, how do they figure into the whole thing?
Yeah, so the FTE calculation, there's two ways to do it. There's a base method, what I call base method, and a simplified method. That tells you how to figure out the number of FTEs. I think what the question's getting at, though, is what reference period do you use? And normally you have, there's two reference periods, and then I'll get to the seasonal after that. The two reference periods are, you go from mid-February to end of June of 2019 and take your average weekly number of FTEs. And the second period is January to end of February of 2020 and take the average number of FTEs. The seasonal rule, and I don't encounter this very frequently, at least in my practice, I believe there's an 8-month period, and you pick any continuous 8-week period that makes sense for you, for your business. I believe that's the way the seasonal rule works. I can spend a second here. Let me see if I can get a quick thing, because this is not something as seasonal. Yeah, you can use either of those two rules above, or any 12-week period from May 1st, 2019 to September 15th, 2019.
Gotcha.
So any 12-week period from May 1st to September 15th of 2019 is the way the rule is written.
Awesome. All right, that sounds good. Now, so any last comments? Anything we haven't asked about, or any questions that haven't been asked that you're thinking through? If there's a couple things you want to leave listening and remembering about what you're hearing, is there anything else that you'd want to say to everybody?
Yeah, last point I'll mention is tax returns. So people are going to be filing. If you take a 24-week covered period, you may not receive a decision on your forgiveness until middle of 2021, but you may file your tax returns for 2020 before then. And the way the rule works is, for employers, the loan, normally when you have cancellation of indebtedness income, that's taxable. And the CARES Act said that when you have forgiveness on a PPP loan, it's tax-free. But the IRS came out with a ruling that said the expenses relating to the forgiveness are not going to be deductible.
I was going to ask you about that question. It just came to mind when you said that. That's huge.
That's huge. So what happens is, if you have 100 of income and you use your PPP to pay 100 of expenses, those expenses are denied, and now you have 100 of taxable income. You have to pay tax on that amount in full. And so a couple of senators and congressmen have said that's not what they intended, and they said that they're going to fix it in subsequent legislation. So this may be fixed in the future. As of now, it's not. So the no income on the forgiveness side, but you lose your deductions on the expense side. And you have to, even worse, if you expect to receive full forgiveness, you're supposed to deny the deductions in 2020, even though you haven't got a decision yet on the forgiveness in 2021.
So just to make that flow for some people, because I've had some people that didn't think that far out. So if your revenues actually didn't decrease and they stay the same, but you took 100 grand and paid down expenses at the end of the year, if you were in the 20% tax bracket, you're going to have a $10,000 tax penalty and wonder where that came from.
20 on 100 grand, 20.
Or I'm sorry, 20 grand. Yeah, 20
Yeah.
grand. So, and you're going to wonder where that came from. It's because you had 100 grand less of deduction. So I think that's a great thing for people to really think through, because I know a lot of people were not thinking that far out when I'd say, well, do you realize you could have, I'd ask them, how are your sales? Well, they're staying pretty consistent. Well, then if your sales aren't going down in relation to your expenses, you're paying down more taxes. So
More
that's
taxes,
a great,
yeah.
right.
I think they're trying to fix it. I just don't know if they're going to have the political will and or the budget to fix it in the next legislation. But I know it's on the table and they're talking about it.
Are they looking at fixing it so that if expenses that you paid with forgiveness would actually be deductible still?
Yes.
Or
Yes.
Oh,
to
wow.
make them deductible. Yeah. They want to. So the IRS came out with a ruling, a notice where they said that I won't get into the details, but they said that the expenses are non-deductible. That notice makes sense. It applies some fairly old rules, long-standing tax policy. There's nothing controversial about it.
Right.
But they want to reverse it legislatively and say that we will give you the deductions for the amounts you pay.
Okay. Awesome. That's a big deal. Big deal for sure.
It is a big deal.
So is that it? Anything else we should be thinking through? Oh, I know one last question. So when will be the first opportunity? Like if you went through all your PPP money and you're ready to do the application, and when will you be able to file that in the future?
That's a good question. I had that same question 2 times earlier today. The limitation will not be a program limitation. It's going to be a bank limitation.
Mm-hmm.
And so I think what's going to happen is, so many people, their 8 weeks has already expired. They've passed that point.
Right.
The bank has to be willing to accept the application. And so we know a new form of application is coming from the SBA. So if I'm a bank, I'm not going to design my process yet. I'm going to wait until the final form is out.
Right.
So I think what the banks are going to do is they're not going to accept paper formats. They're going to set up an online portal, have you input your data into that. So when they look at 1,000 loan applications, forgiveness applications, they're identical. The format's identical, and it saves them a lot of time in reviewing them.
Yeah.
So I don't think they're going to build that until a new application comes out. So if the application comes out in 3 weeks, another month and a half for the banks. So the banks may not be ready to take these applications until August or September.
All right, that sounds good.
That's going to be the real limitation, is the bank's willingness to accept it, I think, as opposed to you running out of being able to have your information collected.
Right. Well, it looks like in our chat line, we've gotten to all the questions. Daniel, thank you so much for today.
Oh, my pleasure.
Appreciate you being here. Members, mark July 7th at 2 p.m. on your calendar. We had a member the other day say, Tom, a lot of our customers and a lot of our employees are now remote, and we're having to do a lot more of these Zoom meetings, webinars, webcasts, however you do them. And we really need to understand how to effectively do that, because people learn differently. They hear things differently. How do we set up our webinars and run them so the meetings are efficient, and how we get our messages heard? So we're having Jeff Cobb from Tagoras. This is a group that works in learning in the online space of what we deal in associations, creating these things. And he's going to be talking about the best practices and keys for you and your organization to put on a phenomenal webcast or webinar so people hear your message and want to take action, or your employees just want to listen to what you got to say. So that's going to be an exciting one. July 7th at 2 p.m. You'll get the invite out here recently. But remember, get in the sales program. Why you wouldn't want to know where sales are going to be in 3 years, I don't know. But if you want to, get your sales in the program and sign up. We'll get you connected in, and we'll get Kristen to call you and warn you. It's a real simple program to administer to get your sale. We're asking just for one number in the sales program, and that's your monthly sales number. Totally secure, and no one can see it but you. But the data you get from it is phenomenal. We got people who they run their sales meetings every single month based upon these figures and these reports. They go to their banks and give them these reports to inform them of how they're doing in the marketplace. Incredible what you can do with these reports. So get involved. But members, always remember, we're here for you. Our priority is your success and your safety. I'm looking forward to being with you through the next year. And tune in next week on July 7th. Thank you very much for your time. And remember, you're not just strong, you're MTI strong. You have a great day.
So long.